Welcome back to HODL. Today we're going to discuss a topic I think every Bitcoin investor are talking about these days, volatility. And we want to look into volatility from a commodity standpoint, where we see Bitcoin as a digital commodity in the same way as we look at gold, oil and gas. And if we start to look at the oil sector and see the Brent crude oil price from 1860s until today, it's very interesting to see the development where you have a kind of a flat development until you saw a lot of use cases for oil popping up. And after you saw the adoption of oil and the use cases was coming, you have seen a very volatile price development in the oil price. And Sander, when you look at this chart showing the oil price, what's your thoughts on that?
Well, I think every non-cash flow generating commodity that are highly liquid will have a lot of volatility. Just based on the demand, it's natural that it goes in cycles. And we're coming a little bit back to it, but our job is not to predict these cycles, but we are big believers in the long-term utility and value of the commodity itself. But every commodity investor should think of volatility as part of the game.
And moving over to gold, which of course many are trying to say that Bitcoin is the new gold. It's quite interesting that you see many of the same patterns when you look at the gold price from the 1970s until today. It's kind of a flat development for decades actually. And then you have actually quite a lot of volatility, even though the trend is positive over time. Do you have any thoughts on gold?
Yeah, I think the moment you start to see more use cases, it gets more volatile again. And I think after the gold standard, we saw hypergrowth in many of the societies. We saw a lot of hypergrowth and also a lot of inflation. Now, when you see more volatility in gold, it's because gold again starts to get more use cases. For many years, as you see from the early 80s to early 2000s, gold didn't have so many use cases that was visible in the society. But now with all these monetary discussions and debt, people seem to value gold in a different way. And when gold gets more use cases, you will see also more volatility naturally.
And if we move over to Bitcoin, I think if you look at this chart, that Bitcoin actually follows the same pattern. It was like a very flat development from 2009 for many years, and then we have seen more and more use cases for Bitcoin popping up, and after that you have seen the volatility in the price development. But the trend is of course very positive over the last 15 years. So do you think it's natural to view the Bitcoin price in the same way as we view oil, gas, gold?
For me, Bitcoin is digital energy. Bitcoin is a digital commodity. It has some great store of value, and which again creates or gives it characteristics of digital gold. And I think yes, you will naturally see a lot of volatility in Bitcoin. And so yeah, I think Bitcoin is a digital commodity, and that's how you should look at it.
Yeah, totally agree. And do you think many people today are having a misconception that they look at Bitcoin companies as a regular tech stock or a SaaS company, which that is the wrong comparison?
Yeah, I think for many years now we have seen a boom in traditional finance, in more like private equity, EBITDA type of activities, where you do consolidate and you raise capital, you buy and build different companies, and they are non-public companies, and therefore you get this. You don't have day-to-day pricing, and therefore people expect like the growth to be more linear or linear or exponentially growth, like you see in venture capital, where it's like either exponential growth or nothing. So, but in a commodity-based business, it's different. But we haven't seen that for many years. You actually have to go back to the 70s, 80s, and 90s with oil and gas and shipping, where we are now in the digital commodity age, where these new type of business developments are growing up.
And moving over to a comparison, which we think is really interesting, where we look at Equinor, which is the largest energy company, oil company out of Norway, and compare it with the Brent crude oil price. And here we see a correlation of 0.8, which is a very high correlation between the oil price and the stock price of Equinor. And even though the stock has outperformed the oil price by 100% since 2002, I think it's very interesting to see that it is the price of the underlying asset that is the one factor that is affecting the stock price the most.
Yeah, I think when your business is highly dependent on a commodity as the underlying asset or even the treasury asset, it will be a high correlation with the asset itself. And it's natural, and that's how it has been for many years, and I think it will be like that for many years as well.
Yeah. And Equinor is just one example. On this graph, we have included Equinor, Aker BP, and Vår Energi, which is three really big energy companies out of Norway, and compared it with the oil price over the last 5 years. And what is really interesting is that you see almost or all the companies are correlating with the oil price and also have a correlation with each other.
Yep.
They follow the same pattern. Do you think, first of all, that we will see the same with Bitcoin companies and the Bitcoin price, and also that the Bitcoin companies are moving in the same pattern as well?
I think we see exactly the same in Bitcoin treasury space. All the companies are following each other. They are highly correlated, not only with Bitcoin, but also the other ones. You saw higher MNAV, everyone traded at the higher MNAV. The flywheel worked, the equity flywheel was executed by more or less all the top Bitcoin treasury companies. The Bitcoin yield was more or less the same. And in Q4, that shift has been significantly different, but still you see that most Bitcoin treasury companies perform more or less the same if they haven't done any major mistake with capital structuring or their debt situation.
Okay, but moving over to Bitcoin, the graph on the screen here is showing the stock price of Strategy compared to the Bitcoin price for the last 5 years. And what I think is really interesting to see is that Strategy's stock price has a correlation of 0.8 with the Bitcoin price, which is exactly the same as we saw with Equinor with the oil price. What's your comment on that?
Again, Bitcoin is a digital commodity. It's digital energy. It's very natural that these Bitcoin treasury companies that are actively managing Bitcoin balance sheets or balance sheets of digital energy follows other energy type companies. So I'm not super surprised to see that the correlation is more or less the same, and it's a matter of educating the market to truly understand that this is a commodity industry. A Bitcoin treasury company is actively managing a commodity, and they aim to be long the commodity. They believe in the long-term value of this industry, but in the short to medium term, it can be volatile and highly correlated with the underlying asset.
Yeah, totally agree. And we also see some years here where the stock has outperformed the Bitcoin price with a lot. So I think you saw many years with almost exactly the same price development, but with both the stock and the Bitcoin price, and then we had an explosive growth in strategy.
Yeah.
So moving over to the next slide, we now have seen for the last 6 months that strategy has actually underperformed the Bitcoin price. Mm-hmm. Why do you think so?
So one of the main benefits of a Bitcoin treasury company is that you get access to very lucrative leverage. Leverage could be convertible bonds, or it can be in some way perpetual preferreds that strategy is actively using now. And when you use leverage, and leverage tends to overperform in good markets, it also has a tendency to underperform in bad markets. And that's basically simple psychology, since you will be very optimistic with the leverage in a good market, and you will be very pessimistic about the leverage in a bad market. So I think it's natural that it will sometimes underperform. But if you look into the history of what type of opportunities that opens up, that's the time you should really accumulate and buy these companies. No financial advice, but if you look at history, this is the times when the companies that have a long history of actually accumulating more of the asset and are good executors, if they trade at a discount or underperforming the commodity itself, that historically have been a very good buying opportunity, just based on the data we have seen here.
Yeah, totally agree. And it's clear for me that both leverage and the volatility is key to have the potential for a very high upside. It's almost the price to pay for the asymmetric upside.
Yes, and both Bitcoin and Bitcoin treasury companies, in comparison to other asset classes, are very, very liquid. So therefore, it's an easy asset to sell. And if you're stuck in a private equity fund for 10 years, you can't sell in 10 years. So therefore, volatility will naturally be lower. But here, both the underlying commodity and the stock itself is very liquid, and therefore also has a tendency to overreact in both ways.
Yeah, I agree. And then I want to discuss, so we have concluded that Bitcoin is a digital commodity, and we think Bitcoin and Bitcoin companies will behave as we have seen in commodity industries for hundreds of years. And then the question is, how should a Bitcoin treasury company like H100 build to survive in this environment?
Yeah, I think one of the most important things, which we also showed in our report, is that when we raised a lot of capital earlier this year, it was very important for us to, one, put cash aside that we know we can at least think 2 years and have the long-term mindset. But on the other side, it was very important for us to structure the debt in a way where we have time. So when we structured our debt, we had convertible bonds. All of them was 5-year terms. They was fiat denominated, which we think was a good arbitrage between the fiat price today and the future of the Bitcoin price. So that is the two things I think every Bitcoin treasury company should consider, ensuring that if you take on debt in fiat, ensure that you can repay it, and ensure that you play with the long duration as Bitcoin has. You can't do short-term fiat loans where you put the underlying asset into Bitcoin because of the volatility. But you have multiple other ways of doing it. So yeah, I would say those are the two things that are very important for Bitcoin treasury companies in general. And then you, of course, have to have good owners. You have to have long-term owners. I think in any hype cycle, you attract cheap and fast capital, but that also creates a sharkish environment, as we have seen in some of the Bitcoin treasury companies, where someone had to sell Bitcoin to repay debt, or they had to restructure, and these kind of things. It's very important to have strong and very aligned owners. And yeah, I think that's the two main points. And again, we can't time the market. I think it's more or less impossible to know where the Bitcoin price is going in the medium, like short to medium term. We know the long term, or quite convinced on the long term. But short term, if you looked at consensus earlier this year, everyone said, okay, and myself included, I was quite confident that Bitcoin is minimum going to 150 this year. I even was out and say 250. So it's impossible to time and predict the market. At least from an operational company, you shouldn't speculate in the short to medium term price movements. And yeah, that's
yeah. So, and talking about resilient companies and how to build companies in this environment, I think that's exactly what we have done in H100. We have built a very good and resilient company to survive long term in this industry. And our debt profile is very, very secure and very good for the company. We have, as of today, 219 million Swedish kronor outstanding in convertible debt, which gives us a leverage ratio of approximately 25% at today's Bitcoin price. And that actually means that we can provide full coverage for all outstanding debt, even though the Bitcoin price was to fall down to 210,000 Swedish kronor, which is approximately $22,000. So I think H100 is in a really good position to be built long term on a really strong, or the best asset in the world.
Yeah, I think we took on debt in a quite. Sometimes you get a little bit lucky when you get access to that kind of debt that we will not repay for the next close to 5 years. And this gives us an opportunity to have a very attractive stock with the right leverage ratio, especially now when the Bitcoin is flat. So if you believe in the next 4.5 year in terms of Bitcoin development measured in price, this is a very good, I would say, very good stock to get access to the right leverage in a very safe way.
Yeah, because you actually want leverage in these companies, right?
Yes.
Yeah. Okay. I think that's it for today. To conclude, I think volatility is not something we should fear. It's something we should understand, and it's just something that comes with building a company on top of a commodity in itself. So I think every major commodities has shown that it is big cycles, and I think Bitcoin will be no different. And we are built for surviving long term and in a really strong position for the future. So yeah, thanks so much for watching episode 2 of HODL, and see you next week.